Bitcoin lost 50% of its value from its all-time high. Spot Bitcoin ETFs have seen $4 billion of withdrawals in 2026 alone. Many investors are leaving Bitcoin and cryptocurrencies and buying gold instead. But what has happened to Bitcoin? And more than anything, what may happen next? My name is Mauro Terrinoni. I'm a former investment banker and hedge fund analyst, and I'm the founder of CryptoPartnerClub.com. I spent many years analyzing investments, both for my job and for my own personal interest, and I always apply traditional financial core principles and business sense to all my investment propositions. In this video, I want to share with you my considerations about what has happened with Bitcoin and some scenarios what may happen next. First of all, let me tell you that this video is not meant for financial advice. I'm not your financial advisor. If you seek financial advice, you should talk to a qualified financial advisor. And remember that when investing, capital is at risk. So now, let's start from where I usually start with my financial analysis, from the data. Bitcoin is currently trading between $68,000 and $69,000, up from a minimum of $66,000 in mid-February 2026, which is a 50% drop from the all-time high of $126,000 in October 2025. So in the last 12 months, approximately Bitcoin is down 21%, and this year is down 24%. This large drop of Bitcoin is not unprecedented. I remember a number of times, 3 or 4 times during the history of Bitcoin, when there were large swings of value. One time, for example, it was the late 2017, it was trading just below $14,000. And in the next 12 months to December 2018, it went down to $3,400. It basically lost 3/4 of its value, 75%. And then again, a number of other times, there were swings in the order of 50-60%. And in all those times, Bitcoin eventually recovered and reached another all-time high. So those events have happened before, and all those times, Bitcoin eventually recovered. Now, let's talk about spot Bitcoin ETFs. If you remember, those products were launched in early 2024. There are 2 larger funds, which are Fidelity and BlackRock. And those products were launched with the aim of offering exposure to Bitcoin to investors that have traditional investment accounts rather than opening a crypto wallet. Now, if you see from this chart, there are green bars that show net inflows. So when more investors put money into the funds than withdraw money from the funds. And the red are instead when there are more outflows than inflows. Now, there's been a number of weeks, 4 to 5 weeks between the end of 2025 and beginning of 2026, when you'll see much larger outflows, which total $4 to $5 billion. And only recently, in the last couple of weeks, we have seen a partial reverse of the trend, with more investors coming in and adding money than withdrawing money. But we should still remember that in total, all the flows of ETFs have reached over $50 billion. That is much more than the expectation when the product was launched. If you remember, in early 2024, the expectations were that it was about $10 to $15 million expected to be collected by investors. And instead, we are well over $50 billion. So that shows how much interest investors had in this product and ultimately in Bitcoin. So this is really a strong trend of how mainstream investors could enter into the Bitcoin market and contribute to push up the price of Bitcoin. In order to understand what may happen next for Bitcoin, we need to look at the fundamentals of Bitcoin as an investment. Now, I've experience in analyzing distressed investments, and an asset that loses 50% of its value would be classified in traditional finance as a distressed investment. And when looking at distressed investment, the question is always, what is the fundamental thesis of this asset? Has this changed? Has it been affected by short-term trends in prices or market fear, but still holds a fundamental value? In the case of Bitcoin, there are no cash flows that may be discounted from the future. So we should really look at the thesis of Bitcoin when it was launched and try to understand if it still holds. The first major element of Bitcoin was Bitcoin as store of value, the digital gold as it was called. So the idea was that in a world, especially around COVID, when central banks were printing money, were adopting quantitative easing policies, supporting their currencies at the risk of devaluation, Bitcoin was an asset that, because of its scarcity and limited supply of 21 million coins was going to hold its value and was not going to be manipulated by governments. This is definitely still the case. The scarcity value of Bitcoin has remained, and the propensity of central banks to manipulate currencies for political reasons is still a concern, creating inflationary pressures. What has, however, changed is that in May and June of last year, in 2025, there was a positive correlation of gold and Bitcoin that was showing that digital gold and real gold were behaving in the same way. So both of them had this attribute of being able to stay stable and protect against inflation. But since August of 2025, the trend has diverged. So the correlation gold versus Bitcoin has become negative. So Bitcoin and gold are now moving in opposite directions, which basically means that some investors are divesting Bitcoin to invest into gold. So it appears that Bitcoin has lost some of its power as store of value, and which is now firmly in the ground of gold, and therefore gold has benefited in price while Bitcoin has lost this attribute. Another key investment theme for Bitcoin has traditionally been the low correlation to stock. So the idea was that Bitcoin would follow its own growth pattern, while stocks would be exposed typically to macroeconomic cycles. And hence, adding Bitcoin to a portfolio of stocks would decrease the risk because it would decrease the volatility of the portfolio as they move in a non-correlated pattern. Now, this theme of low correlation to stocks, as you can see from the chart, does not seem to hold anymore. The chart shows from the beginning of the year how Bitcoin is moving compared to S&P 500. And as you can see, the two do not seem to have non-correlated pattern. In fact, they seem to move relatively in a parallel way. And if that is the case, and if Bitcoin now is not uncorrelated to stock anymore, one major investment theme does seem to fall apart. In fact, both Bitcoin and stocks, and particularly growth stocks, so therefore Nasdaq, have currently the same problem, which is high real yield. Since growth stocks and Bitcoin both have a payout which is further down in time with no interim cash flow, they both are very sensitive to high real yield. So the rate of discount at which the future cash flows are discounted. And so the higher they are, the lower the net present value. And this is an element that is currently affecting the value of both Bitcoin and growth stocks. So two major investment themes for Bitcoin, the digital gold and the low correlation to stock, do not seem to hold anymore. So what is really left as major investment theme for Bitcoin? In my view, it's the technology behind Bitcoin, which is the blockchain. The blockchain is a technology that enables frictionless payments 24/7 around the world, does not require correspondent banks to be able to make a payment from one person to another across different payment structures. And effectively, the blockchain is a technology that is able to replace the old dated payment structure that still is in place and still works only in a way that does not allow borderless payments around the world. This theme is particularly visible when you speak with people that live in countries that are not part of the mainstream banking infrastructure. And I remember, for example, anecdotically, I was at a blockchain conference in Dubai recently, and there I met a young man who came from one of the former CIS republics in Central Asia. And he basically told me he was just 20 years old and very proudly told me that he had started a crypto exchange, which I thought was an incredible project. And so I asked him out of curiosity to tell me the website because I wanted to check it on my phone. And he told me, to my surprise, there's no website. And I couldn't understand what he meant. And then he said, it's a shop. People walk into the shop with currency and I give them Bitcoin. That's what he said. I give them Bitcoin. So he basically created a crypto wallet for his clients. And, there was so much demand because people in this small country did not want their savings tied into the local currency. It could have been manipulated by the government, by the regulatory bodies. They wanted access to the international payment structure. And Bitcoin was their only way to participate. This was an amazing story that really made me understand that Bitcoin is a worldwide phenomenon, and especially people that live in countries outside the Western world, where the population is growing in Africa, in Asia, in South America. Let's see, for example, in Salvador, that really is adopting blockchain and Bitcoin. those countries are at the forefront of adoption of Bitcoin, and I think they will represent a key element for the growth of the currency. Let's now sum up 3 themes for a bearish Bitcoin and 3 themes for a bullish Bitcoin. Looking at the bearish Bitcoin, the first element is the high real yield. As explained, Bitcoin and growth stocks do not have intermediate payouts, and therefore they are more exposed by an increase in high real yield, and because of the net present value of the payout that will be collected by investors in due course. The second element is the macro and geopolitical uncertainty. The events in the Middle East are causing investors to be cautious and stay at the fence without re-entering securities market and Bitcoin. And it is possible that if the events were to deteriorate further, some liquidity could be drawn from any public market, including digital market. And finally, the correlation to stocks. We have seen in the last few months, Bitcoin has moved in a highly correlated fashion compared to stocks and S&P indices and Nasdaq. So if there were stocks to fall because of a number of economic events, for example, the private credit shock or employment-related news, it is possible that Bitcoin and digital assets could suffer from the same fate and really further deteriorate in value. Let's now look at the bullish elements that may support Bitcoin to actually go up in value. The first element is the increased adoption. We have seen in the last couple of years the enormous success that spot Bitcoin ETFs have had with inflows of over $50 billion net of outflows. So more than 5 times what had initially been envisaged. That shows really increased adoption of Bitcoin with retail and with institutional investors. Even corporates and treasuries have started to accumulate Bitcoin. It's become a really common strategy. And that, if extended further, could support Bitcoin going up in price. The second element is the regulatory outlook. We have seen a more benign outlook for a number of crypto projects. Crypto.com, for example, received a preliminary approval from the US regulatory bodies to establish custodian bank in the States. This can be considered a major step towards convergence crypto and traditional finance. And even in Europe with MiCA, in a cautious way, regulators are starting to regulate and yet accept Bitcoin and support it. And finally, this is mostly a technical event, the halving events of Bitcoin. Explain in a second what that means. So Bitcoin has a finite number of coins, that 21 million. Of those 21 million, 20 million have already been mined and only 1 million is left. But it was programmed, all the coins, to be distributed until year 2140. So there's basically over 100 years left during which Bitcoins will be mined and distributed. But obviously, since over 20 million out of 21 have already been issued, the number of Bitcoins that will be issued every year will be smaller and smaller. And this process is called halving, because every 4 years, the number of Bitcoins per block is reduced by 50%. Then that's why it's called halving. And typically, a halving event is traditionally linked to an appreciation of value of Bitcoin due to the scarcity value. So the last Bitcoin halving event, as you can see from this table, was in 2024. The next one is scheduled for 2028. So there is a catalyst for Bitcoin to pick up value further if it behaves the way it has in the last number of halving events. Let's now look at 3 potential scenarios for Bitcoin for the next 12 to 18 months, starting from a downside scenario of Bitcoin at $40,000 to $50,000, which could happen if there's persistent uncertainty on geopolitical situation. If stock market remains weak or potentially turns on the negative, Bitcoin breaks support and plunges below 50 to 40 or further below potentially in case of acute downside risk. Then there is a base case which is associated to essentially Bitcoin consolidated the current position and where the stock market remain nervous and a number of investors do not materially come back to the market with new inflows, and the situation remains currently unstable and therefore justifies a valuation that is broadly in line with what we have seen or slightly above. And finally, an upside scenario that is linked to the situation easing on the macroeconomic risk, positive news for digital assets on the regulatory side that will foster further acceptance and new investors coming to the market and widespread adoption. This could allow Bitcoin to reach 90,000, 120,000 and further above, potentially 150,000 if news were extremely positive. So these are a number of scenarios that I can see reading from the current events. It will be up to you to decide which one you think is most likely to happen. In fact, I would love you to drop comments and participate to the discussion. And I believe that consensus is formed through challenges, through people have different opinions. So please drop your comments and share with me your ideas. Thanks very much for watching my video. If you enjoyed it, please subscribe to the channel and sign up on cryptopartnerclub.com for more news and content. See you at the next video.